Well, today marks a moment Bitcoin enthusiasts have been buzzing about for weeks, the so-called halving, which occurs roughly every 4 years. What is it? Bloomberg's Annabelle Drewlers explains.
The Olympics, Sporting World Cups, leap years, and Bitcoin halving. They each happen every 4 years, and in the crypto world, halvings typically meant a boon for prices. In a nutshell, Bitcoin halving means fewer new tokens are issued. That's because Bitcoin miners, who validate blockchain transactions, receive 50% less of a reward for doing so. At Bitcoin's launch in 2009, miners received 50 new coins per block. Post the halving in 2024, that'll be cut to just 3.125 Bitcoin instead. In the past, we've seen prices spike following the event. For example, in 2012, when the token jumped by 8,000% in the following 12 months. This time around, the prospect for further gains is unclear. Some analysts say the halving could trigger upside of at least 80%. Others argue the event is already baked in, particularly as Bitcoin's already risen to fresh records this year, which brings to mind a familiar phrase: past performance does not guarantee future results.
Okay, against that backdrop, let's bring in an analyst who tracks Bitcoin. Geoff Kendrick is head of digital assets research at Standard Chartered. Geoff, great to have you back with us. How significant is this moment for Bitcoin?
Funnily enough, I'd say this halving is less important than previous ones. So we've had, obviously, the ETF inflows in the US have dominated, really, the demand-supply metrics in 2024 so far. So that's been about $12 billion of net inflow since the start of the year, which is huge in terms of how the ETFs have gone so far. Obviously, once we have the halving overnight tonight, and you have only half as many new coins, so you go down from 900 a day to 450 a day, that helps at the margin. But the ETF flows, which have stalled in the last few weeks, as well as the Middle East tensions that you were talking about with the last guest, have been, let's say, dominant for now. So what I would like to see is we get through the halving tonight. Hopefully, some of those Middle East tensions will start to come off again. Obviously, it appeared that the move overnight was relatively muted, which would be fantastic. We've had a large move lower in Bitcoin. Specifically on Saturday last weekend, there was $260 million Bitcoin leverage positions were liquidated. So the market is now looking much more square going into the halving, if you like, in terms of leverage. So that's very helpful. So hopefully we can get through the halving tonight, get some slightly more positive news out of the Middle East, which would be fantastic. And I suspect that can then see Bitcoin start to retrend higher. I'm still looking for $150,000 by the end of this year. So less important on the halving, but from where we are now, it's starting to look like we can push higher again.
I'm going to reiterate what you just said. With Bitcoin trading below 65,000, your year-end forecast, 150,000 per coin for Bitcoin and 200,000 by the end of 2025. What are the specific reasons for your expectations that we'll see a notable lift from here?
So part of it is those ETF inflows. As I mentioned, they've stalled for now, but I anticipate going from the start of this year to when the ETF market in the US is mature, we'll get between 50 and $100 billion of inflow. So far we've had 12 billion, as I mentioned earlier. Now, I suspect that can now happen over about an 18 months to 24 month period. When that happened for gold, when we went in the US from no spot ETF market in 2004 to that market gradually maturing, the price of gold multiplied by 4.3 times. So that could get us to that 150 to 200,000 range as sort of input number one. Input number two is over time when you have enough investors, i.e. investors are fully sated in terms of their Bitcoin exposure, which hasn't been the case before the ETFs, but over time, if we get those ETF flows in, that should be where we end up. In terms of a portfolio between Bitcoin and gold, you should get to about 80% gold, 20% Bitcoin. And for that, even if gold prices were to go sideways, again, that gets you to that $150,000 to $200,000 mark in terms of Bitcoin. So there's a few factors that are all driving to roughly the same level. I think medium term, if we get to 200,000, because of the institutional flows as well, it's much more likely that Bitcoin won't have a large retracement which it did have in previous cycles. So again, that halving cycle story becomes slightly less important.
Geoff, we could talk all hour, and unfortunately we're almost out of time, but just to balance the scales, as you know, Jamie Dimon has had plenty to say about cryptocurrencies, even though his firm has been quite involved in this big ETF boom as well, making headlines, once again, describing Bitcoin as a Ponzi scheme. What is your view on that, briefly?
There's a lot of people out there that don't understand the basic methodology behind Bitcoin. And although I'm not suggesting that's Jamie Dimon, certainly some of those comments are stepping back from the broader need for, let's call it, internet money backed by blockchain technology. And it's really that blockchain technology which is where the value is medium term. And so Bitcoin is the first in on that. It's the largest asset at the moment, makes up for more than 50% of the crypto market. But that opens up the Ethereum and other use cases, which quite frankly, over the next 5 to 10 years, you can easily see a lot of traditional finance go on-chain. We've already started to see bits and pieces of that, as well as other industries. So that blockchain technology, which is behind Bitcoin, I think is extremely valuable.
Okay.